joining in to talk about the commodity space. Manisha.
Thank you so much for that, Ekta. And joining me on the show is Colin Shah. He's MD Kama Jewellery. Colin, thank you so much for joining us. And I, first of all, want your reaction onto the DGFT notification that came in last night. And this is about import of jewellery and 5 HSN codes which have been put out in the DGFT notification. We do understand that the CEPA with UAE stands tall. It is about the least developed countries, perhaps South African countries, Indonesia, Tanzania for that matter, which really could be in, is what the DGFT is talking about here. But my sense is we did see a huge surge in sense of jewellery imports from many of these countries. How do you see, one, the impact of this, and how do you see the pricing within country with this?
Thanks, Manisha. So the DGFT notification yesterday is mainly, I would say, correcting an error which was maybe there in the earlier agreements. So, we were never meant to, I would say, import plain gold jewelry, especially from Indonesia or Tanzania, which was basically the jewelry was coming to India, being melted, and then utilized for, the obvious duty benefit, which obviously puts, say, most manufacturers and retailers in India at a disadvantage on pricing. So I guess the notification is a welcome change, and it will correct that anomaly of imports which were coming in from both these countries. As far as the India-UAE FTA is concerned, that stays in place, and we are really hoping as industry that it only gets strengthened further because it will really help boost exports from India.
Since you have spoken about exports as well, Colin, and if you look at the first quarter or even as the last couple of months of the new financial year, the numbers in sense of exports haven't been so strong. Barring gold jewellery or plain gold jewellery, that is, everything else seems to have seen a bit of a decline and not exactly a growth quarter on quarter or even year on year that matter.
This year will be a challenging year for exports. I mean, our main markets, US and China, continue to be in turmoil. Last quarter, even in the US, because of all this, I would say the industry is going through a transition phase, especially when it comes to the confusion between natural and lab grown and where both will land up in a year or a couple of years from now. So that is making, I would say, the retailers a little nervous globally. But having said that, I guess there will be more clarity coming towards the end of the year, where I guess the retailers and consumers will be either on the natural side or the lab-grown side. And as soon as that clarity emerges in a very positive way, I would say, for both sectors, I guess both will, again, flourish maybe in the 2-3 years. But having said that, on the India front specifically, and, we're thankful that finally election has come to an end. There's a new government in place. We are very happy as industry that we have the same commerce and finance minister. So there's continuity as far as policy is concerned. And what the industry anxiously needs now is the new SEZ Act. Because as soon as the new SEZ Act comes in place, a lot of policy issues which exporters are facing in our industry and other industries in the SEZ will get resolved, which will give a boost, especially in times like this when exports to begin with is challenging in the global scenario.
Well, Colin, that exactly was going to be my next question on what are your expectations from the new government. And as you said, the SEZ Act is something that you look forward to. Is there a timeline that you think, is there a particular clause or a point that you think should be included within the Act as well?
See, in the Act, the two main, I would say, asks of the industry has been for some time now, which is reverse job work and, ease of transferring property. So if these two are taken care of, besides, of course, I won't get into, several other smaller issues, but the SEZ Act, as you know, it's an act of parliament, and it was done many years back. Now, obviously, industry has evolved, the whole world has changed from AI to, and I guess the act hasn't followed suit with what the industry globally has changed to. So I guess a new act is much desired. And especially it needs to take care of the few, challenges which industry has been facing historically since many years. So that's one part of it. Second is asked from the budget very clearly, and they continue to be, more or less the same. But we are really hoping that with this fiscal space that the government has today, if something can be done on the duty of, metals, especially gold, platinum. because
Right.
with these high duties, smuggling has gone up. It continues to go up. And, then we have issues with FTAs and various other challenges which industry faces. And especially in a time when India has gotten organized, if you see more and more retailers are getting listed, which is a welcome scenario even from, the government's point of view, because we're going to have much more data on, say, our industry, which we never had historically, except for, you had a few listed companies. So now if the industry is putting in so much effort to getting organized, being compliant, all marking, GST, this huge anomaly on duty is causing a distortion between the organized trade and the unorganized trade. So if duties are reduced to a rational, I guess, era where it used to be earlier, the
Right.
smuggling would stop, and it will help the consumer in India first, because there'll be a cost benefit. And believe it or
Fine.
not, in spite of, the stock market going up tremendously and huge amounts of other avenues of investment opening up, gold
Yeah.
continues to stay a safe haven globally.
It
that's
does,
why
and we've seen
had
that.
this bull run.
And yes,
Yeah.
we've seen that in percentage terms as well. Even as the equity markets continue to make all-time high, it clearly has been a portfolio diversifier and stronger gains continuing in gold. Colin, a final question, and this one is on the Indian markets itself. We've spoken about imports and exports, but within the domestic markets, what kind of demand scenarios are opening up now? Because the first quarter was slightly weak. Second quarter, we saw Akshaya Tritiya coming in. By the time we are into third quarter, do you see festival demand picking up? Or do you think, as you said, the exports could be challenging, but are the domestic markets keeping you glad?
See, if you look at the financial year, the first quarter every year generally, because of Akshaya Tritiya, is strong. But this year, due to election season, it did not have, I guess, the demand that it should have seen. Okay, so the first quarter was quite soft for retail across India. July, August, September quarter is always soft due to monsoon, Shraddh, not so many good days. The industry actually kicks off only from Raksha Bandhan and Ganesh Chaturthi, and then onwards, right? That's when the auspicious days start, auspicious season starts, wedding season, it's the beginning, okay? So what the industry expects this year is that October to March will be very strong. Everyone's thankful that, there's a stable government, again in the center. There'll be continuity. The first 100 days, everyone's expecting a lot, right? And if, there is some amount of delivery on the ground on all the promises, then I think industry, there will be a little buoyant mood come October to March. So what the industry expects is that in October to March, they'll have to make up for the loss of April, May, June, plus have some growth.
All right. So we are looking
the
at positive
expectation right
numbers
now.
going through. I get your point with the fact that the same government continues and the continuity in sense of reforms would also be there. So that is something that the industry clearly seems to be cheering on. Colin, as always, thank you so much for joining us for a detailed understanding on what really does the latest DGFT notification mean and also what the government formation means for the sector. But with that, it's a wrap on this edition of Halftime Report. Business Lunch will take all the action forward.